Welcome back to the latest edition of the Wu-McMillan Group Weekly Market Update. These updates are designed to keep you informed about the changes in the industry and how those changes may benefit you. Hi, I'm Sean McMillan, your home and mortgage strategist on behalf of Jay Wu and the Westside Hub. And today's theme is, where have all the stated income loans gone? You might remember hearing about low doc, no doc, easy qualifier type loans where the income was stated. As recently as 6 months ago, this was probably the significant portion of applications taken for mortgages. The popularity of these two types of loans was understandable, as it allowed for applicants and the loan broker to simply create an income that would represent enough financial wherewithal to cover the monthly obligations. However, it is likely that this type of loan structure was really a contributing factor in the current credit crisis, as many investors had turned a blind eye to the validity of such representations, thereby allowing for less and less qualified borrowers to gain access to aggressive, high loan-to-value products with great rates, and thereby artificially driving the values in an all too fantastic way. You talk about inflationary pressures. This practice literally added fuel to a fire that seemingly raged out of control until the credit crunch hit. Now all these underqualified borrowers can't perform, can't handle the adjustments and payments, and therefore subsequently turn their properties back over to the banks, unknowingly adding greater volatility by increasing supply, lowering demand, and negatively impacting the equity of their former neighbors. It's quite a mess indeed. Over the course of the past several months, there has been a notable departure from the remaining lenders from doing or allowing loans where the borrower's income is simply stated and not verified. This isn't to say that there aren't any of these resources available. It's just to say that there are far fewer players in the industry that have the capacity or taste for such products. This is a direct response to the lack of liquidity, or in fact, words you can substitute belief in the quality of mortgages as securities. Given the Fed's recent interest rate cuts, it should be just a matter of time before a secondary market perceives enough reward to merit the risk of investing in mortgage-backed securities. Although, suffice it to say, we don't think we're going to see any kind of wild, wild west activity soon. Fortunately for our clientele, we remain vigilant in our discovering new resources and maintaining awareness with the old ones. It has become increasingly important to reach out to those old contacts, to check in, and you never know where someone you once worked with at one bank has ended up working at another. The playing field is littered with talented people repositioning elsewhere, and because we treat our colleagues and associates as part of an extended family, we feel it's very fortunate to keep our finger on the pulse of the market during these challenging times. The real message of this blog, more than ever, it is important to introduce people you care about to the people that you trust. And we welcome your comments, your referrals, and please email us with your questions or comments to team@wumac.com or call us at 310-234-3278. This has been your Mortgage Update by Sean McMillan on behalf of Jay Wu and the Westside Hub. And who is the next person that you can think of that could use our help? Thank you for listening and watching.